As mentioned in my email sent out yesterday, we have an increasing of the volatility on last Friday. The volume increased locally, the magnitude to the downside, minus 0.7% compared to the past. From here, this direction, this is by far the most bearish bar that we have ever seen since the second reaction. This is the first reaction. We have this two bar came with excessive supply. This is a shallow pullback. Here, the volatility is picking up. The third reaction could hit a immediate support level around 6,400. It could even take it out by a spring, a temporary commitment, and followed by a get back up scenario and to go up from here, or even to build up another handle consolidation testing before it's resumed the momentum to the upside. 6,400 is the first level that I pay attention to because that's decent level, has been tested 3 days from the past. If we look at these three bars, 6,400 level has been tested continuously for 3 days and then get resolved by this momentum bar to the upside. That's where the demand show up. Every time it did below 6,400, the buyers show up and bought a dip, and aggressive demand increase here and commit above the previous swing high level. Last Friday, 29th of August, is one of the clues that we have an increasing of the volatility, and it looks like today should be a continuous to the downside to test this momentum bar. 6,400 is the first level that I am watching out. We need to see whether there will be any buyers emerge from there by the past, followed by next level is the swing low level, 6250. S&P 500 has all the rights, come back to test 6,400 or even to break down. If it have a breakdown, it should trigger some form of the fear. It could be the second point of the fear to test the previous swing low level at 6240, even to spring it, to kickstart the sign of strong rally. That's also a possible bullish scenario. September is not a good season for the market. It's well known for the increase of the volatility, sometimes even triggers short-term crash. If we could survive from August, September, and after the mid-October, it should be back to the bullish season and all the way to Christmas. There is increasing of the volatility for sure, as reflected in the increasing of the supply level and also increasing of the progress to the downside. Candles are getting bigger compared to second reaction. Short term, S&P 500 should see some downward movement to test 6,400 level. That should act as the first level of the support. If this level is violated, the next level will be 6240. Short term is slightly going to go down. That's also matching the September seasonality. The medium term, this is an upsloping time of the trading range, similar to last time that we have a change of character, a deeper pullback reaction. The first reaction is matching this first reaction here. And this upsloping time of the trading range is matching this upsloping type of the trading range. But long-term trend is still bullish. If you are planning to buy on a dip 6240 to about 6100, this is the level that it should get some strong support. This is the meaningful zone that we want to pay attention to. At this point, 6400 is the first level we need to pay attention to, followed by 6240.